By the way, an exchange-traded fund.
I was going to ask. I'm like, what is it? How does it affect me?
It doesn't always have to be rational. The decisions that people are making, they don't always have to be rational. Like
Nancy Pelosi's portfolio is a great example, right? She's been outperforming S&P 500 consistently. Hi guys, before we get into the episode, I have to tell you something very, very, very important. I'm really, really broke right now. And here's something you can do to help me. If you're looking for a master's degree or a bachelor's degree, you're going to different types of universities and they all just overwhelm you. The truth is you can get up to 50% off on roughly 400 universities across US, UK and UAE. Get your application fee completely waived off. And on top of that, get reimbursements for your IELTS and TOEFL as well. You go to bit.ly/paylessfees. That is bit.ly/paylessfees. You go in there, fill the form, drop your name, drop your email. These guys are really desperate, so they will reach out to you very soon. Hi everybody, welcome to the Dollar Dairies. Today we have an amazing guest, Noor, who's a journalist at Busy Next Media. Noor, how are you doing?
I'm good. How are you?
So far so good. Depends on how the conversation goes. Noor, you studied journalism and then you delved into business journalism, right? Business and finance and the complex worlds of, numbers and charts and tricks that most people are like too annoyed to look at. What got you into that part? What was your journey into business news?
This is actually, it's a very fun, it's a very interesting story. And I say it to every single person I meet, and that asks me this question. It was a life-changing thing for me. I think where it started was probably when I was just growing up and I felt like I always had something to say, and I felt like there were just so many things that I'm angry about in the world, we were growing up, there were revolutions happening everywhere and so many things going on. And we have faint memories of the financial crisis and there's just this inborn anxiety and it's unconscious and you don't know where it came from, but it is rooting out of those things that you lived through. And I feel that's why me and a lot of people in our generation just feel there's a lot of things that are wrong in the world and they feel they want to do something to make it right. And that's where I felt I was just born to change the world. I know it sounds cheesy, but seriously, I really don't think it is. I don't think it is. I think that it's totally normal to think that you want to change the world. Okay, even if you don't want to change the world, and even if you can't change the world, but if you just if this is how you're thinking, that's just how you're going to walk through life. You're going to do everything right. And if you see something wrong, you're going to say, hey, that's wrong, and that's right. I felt there was something to be said, but I didn't know what it was. And then 4 years later, I graduated from journalism. My professor back then in college, she sent me this internship at Bloomberg. She was like, hey, you should apply to this internship. And so I looked at it and I was like, yeah, okay. It's a place for business, to me, that was, I have never even been exposed, I've never exposed myself to that, and to be completely honest, the stuff we would learn and in journalism, it's a lot of it is theory and also a lot of it is just writing about very random things, not economy things, So to me, economics and business and numbers, this was it was a very new area. So I was okay, it was COVID in 2020. So I was you know what, let me just apply to it. I didn't even know this internship was open to the world. So I applied to it and I wasn't thinking too much about it. Maybe that's why it worked. I don't know. And then they called me and they were okay, you're in. And I was so excited and I had absolutely no idea what I'm going into. I did not know what I was going to walk in to do, the difference between stocks and bonds was a little bit still confusing to me back then, I just graduated, journalism major, I haven't been reading too much about the economy and I was just never exposed to that because I didn't have to be exposed to that in my studies. I went in my first day at Bloomberg and it was magical. Okay. I was so excited because it's this huge company, huge legacy media company. And I was completely honest to them about the fact that I don't know what this is, you know? And they were like, okay, you know, and this was key, by the way. They were like, okay, that's fine. We're going to teach you. So I started reading articles. I had absolutely no idea what they meant. Okay, like if you haven't been exposed to like economics and numbers and like this stuff, and like you read a Bloomberg article, like it's really like it could be very difficult for you to kind of understand like what is this, you know? Okay, yeah, I understand this word, but like what does this mean, you know? Like
True.
for me, I kept on reading, you know, and like words kept on coming up, and like I would take this word and I'd be like, what does this mean? Like explain it to me. And I think this is like very important as well. I was just like so unapologetically like curious, and I would ask every single question, and I don't care if it's stupid or not, you know. I was just like, tell me what this means, explain that to me, you know, like explain it to me like I'm 5, you know. And they did. And then suddenly, like the more I started reading, and like things just started like making sense in my head, because like you're reading like an article today and another article tomorrow and a third article the day after. And then when you're reading the third article, you go like, oh yeah, I read that in the first article. Now it makes sense. Okay, I see the link. It was like a puzzle, and like the pieces were starting to like come together in my head that, oh my God, like this is so important. How was I not exposed to this before? You know, like the economy and like how geopolitics plays into it, and how like everything is like so interconnected. And like you open a map and you realize that every single thing that is happening in every single point of that printed map in your hand, it's all linked together. It's all related. And then you suddenly start realizing, I suddenly started realizing that, okay, like this is how the world works. And like, I need to understand how this goes. And that's when I felt like, because of how fascinated I was by what I was learning, I felt like I was just so shocked how so many people my age and so many people like from my friends like around me, like they had absolutely no idea what this is. Like they were like, yeah, like, so what? So what's the Fed, you know? The Federal Reserve, like what is that, you know? What stock market? Yeah, like stock market. Yeah, okay, so like what do you mean, guys? This is so important. But I don't blame them, because there's not enough exposure like for people like us to such things.
Everybody kind of knows like stock market to some degree, right? They know there are like companies listed. That's pretty much it. But there's so much more to it. The stock market, then there's the bonds market, the commodities market.
Yeah, that's where you lose everyone.
Yeah,
you see that's where you go like, they go like, okay, whatever, like I don't care about
would
this
say where
stuff.
you lose people is like when you come into the like derivatives market, right? There's like people betting on things to go up and down with call options.
No, you lose them even when you just say bonds, because to them that's like bonds, like what, like friendship, like what do you mean? Like that's the thing, you get it? I mean, like that's because to them it's like, why are you telling me all this complicated stuff? It means like absolutely nothing for my life, you know. I just want to wake up and like go to my job, get my money, and go out with my friends, enjoy my life, come back, watch my Netflix. Like to them, like this is like, why? That's just too much. I don't need to know this, you know. But you do need to know this, you know. That's the thing. So that's what made me think. I was like, okay, maybe this is the change that I can make, you know. Like I'm young and I found an interest in this. So maybe I could find a way to like talk about this to people my age. You know, those people are gonna be like tomorrow's like CEOs and like tomorrow's employees, like whatever professionals, investors, and like they're gonna be the future, right? So maybe I can find a way to talk to them about this. And that's kind of where like brings me back to that question that you asked. Like that's how I got into it. It was surprising to me. I didn't think I would be like so obsessed with this. Like I didn't think it was possible to develop a new passion, but it is, because like I was like, I couldn't read anything else. I seriously, and until this day, I find it so difficult to read anything that is not like, you know, that doesn't have to do with like explaining the world, you know. So yeah,
that's also like another thing, right? Like if they are CEOs or other things aside, on an ordinary basis, they're probably going to invest and everything. And that's kind of how like the 2008 crisis happened, right? They practically bought their own loan. Like they would take a mortgage, and then it gets repackaged, and they would put up money on the bonds. So they practically pay themselves.
Yeah.
And if people understood what was happening back then, like people wouldn't have fallen into the
Exactly.
trap.
That's exactly the point. Like when I started reading those articles, things started to like make sense and like come together, and I started to realize, okay, that's how the stock market relates to the like whatever, like presidential elections in that country, and like that's how it like, so these things started to make like sense little by little, and then I got to the 2008 crisis, and that's actually where I started. I didn't start like my learning journey like in a chronological order, but like I went backwards. So I was like, okay, 2008 crisis, and I was mind boggled by the stuff that I read. You know, I was like, what? Like, seriously, this is what happened? Like, it was
Because it has like every class of asset in that this thing, right? You have your like mortgages, loans, you have bonds, you have assets breaking off because of that. And these like the big banks like JP Morgan, they took an insurance on top of this. So all your asset classes are covered in just one crisis. It's just like a roundabout fraud.
and this was to me, it was like, it was a totally like new thing, you know? So yeah, that's exactly how it started. Journalism major to like someone that's, you know, interested in this world.
Why do you think, like, is this specific to the business and finance side of things? Because if I look at things like, for example, if I have a doubt in IT, if I want to learn coding, everything's readily available. A step-by-step guide of like, you know, how to do it is like, you know, compressed in such a digestible manner.
Yeah.
All right. If it's about like when we started the podcast, I was doing a lot of research on the cameras and this thing, mics, all these information are so easily available. But when it comes to finance information, it's almost always complex. And every time somebody tries to make it simple, it's like, hey bros, guys, buy this crypto coin. I'm buying this coin is going to the moon. Like that's what all of the conversation about finance is like. Why do you think that is? Especially considering that you worked in Bloomberg, you've done a stint in like National briefly, but you worked quite a bit in Ashak News as well, covering business. You've been part of that mainstream system. Do you feel like there is some responsibility on the mainstream system for bringing this trouble of having very complex information?
Okay, let me tell you something. There's like a realization that I came to when I was like uncovering this whole like world of like business for myself, you know, for like my like little self in the middle of this huge world. There would be something like that sounds like so complicated to someone that is hearing it for the first time. Let's take an example, okay? Exchange traded funds, okay?
No clue what that is.
Yeah, see, this is like something to someone that just, you know, like you work in PR and like that's a different industry.
Yeah.
And then someone like from business just comes and tells you, hey, I've invested in an exchange traded fund.
Like, cool.
Yeah. So yeah, that's the thing. When I was learning about this stuff and I saw stuff like that, I was like, what is an exchange traded fund? And then when I would find the definition or ask someone and they would explain to me what an exchange traded fund is, I'd be like, okay, why does it sound so complicated? What is this terminology? Like, why are the names of things in business and the economy complete sense? So, but again, this could be why it sounds very like complicated and difficult to digest for like people. And by the way, an exchange traded fund.
I was going to ask. I'm like, what is it? How does it affect me?
Okay. What I'm going to say is not the actual definition.
Okay. No, it works.
Yeah,
whatever it
but
is.
if you want me to explain it to you like you're 5, I would say it is basically a basket, okay, of like so many different like stocks, okay, like whatever. Let's say it's like technology ETF. So it's like a basket and it has like Microsoft technology, other technology companies, Apple and like Meta and stuff. And like all these stocks are put in one basket, okay, and they're combined and then they're cut up, okay, into pieces, okay, and I sell you that one piece. So instead of investing into one, you're a finance major, so like
that is the most appropriate definition I've heard.
You can tell me if I'm doing this right. It's instead of like buying one stock, okay, and if this stock is doing well, you're amazing, and if it like goes down, like you're like you know, like your pocket like is empty. So instead of like doing that, just buying into one stock, and like depending on how this one company is like doing, okay, and performing, you buy into an ETF of technology stocks, so many different technology stocks, okay, that you can buy into.
You're spreading the risk, basically.
Yeah, you're basically spreading the risk.
Instead
and
of betting on one company, you're
Yeah.
betting on 100 companies.
It's a broader bet.
Okay, so there are a couple of companies like Vanguard, Fidelity. There's one big one. I'm blanking out. BlackRock, right? All of these guys,
There's one big one that's the biggest asset manager in the world.
so what they do is somebody has to buy all these stocks, make it into baskets and sell.
Okay.
Okay, think of it this way, okay? I have 5 chocolates. Okay, I'm giving you a bouquet, but I need to buy the chocolates. You don't want to do all this effort of buying 50 different chocolates and making it into a bouquet. So I buy 50 boxes of chocolates, like, one Kit Kat, one Oreo, one this, that. I make a bouquet and I sell you a bouquet. And I sell Noor a bouquet. And then I charge you extra for a bouquet, like a premium for a bouquet for Noor. And that premium is my...
That is interesting.
There are so many things. If you go on Reddit, look for them, you'll find a very simple explanation that's so easy to understand, because these are people that are just like us. They're young, okay? They have some money, but they're also smart. They understand what they're talking about, but they know that it's not as complicated as it sounds, guys. It is 1, 2, 3, 4, okay? But so that's the answer to the part of like why it's so difficult to digest. I think so many things, like so many terms just sound so complicated. And legacy media like Bloomberg and CNBC and Reuters, like, no, like they can't be blamed for anything. They have a target audience, okay? Their target audience are a specific tranche of like the population, or like the investor population, okay? Institutional investors or non-institutional investors, which are basically not companies, but they are
retail investors.
Yeah, like no,
It's not
just
day-to-day.
non-institutional. Okay, there's retail, non-institutional, and institutional. Retail investors are people like us. Okay, they invest small amounts of money, like not like comparably, small amounts of money. Non-institutional investors, they're not like, they don't have to be companies, but correct me if I'm wrong. They don't have to be companies, but they have a lot of money. They invest a significant amount of money, And then institutional investors are like the big companies,
The private hedge funds.
Yeah.
They are institutionals. The non-institutionals are like, like high net worth individuals.
Exactly.
Or like sometimes companies, right? Let's say you are not even investing, you're just making chocolate, but you want to get good price on your cocoa beans. So you still become a market participant investing in like future contracts and different types of contracts.
So that's the thing. This legacy media, okay, these are the people they're writing for, They're writing for big companies in the world that have so much money, and like the stuff. And that's why like when these companies like legacy media, when they like break news, a lot of this news is market moving in a crazy way. Like they can literally like, they have their sources, obviously, like they've been in this industry for so long. So like, let's say like they break like news about like some kind of like IPO that people are waiting for, the stuff that they're putting out there, who's reading them? They're the people that are sitting at those big companies, they have like they have their subscriptions to these people, to these media platforms, and like they know that these media platforms are going to give them the news that they need to move the huge piles of money that they're moving in the markets. And that's why anything that comes out, like anything like obviously market moving that comes out of these legacy like media companies, they are so significant to markets. But that's the thing, they're not to be blamed. That's what their job is. These are the people they're writing for.
The only way I can think of answering is true jargons. I can't until somebody tells me, hey, can you break it down? I can't like physically break it down.
Yeah, you see, that's why journalists exist, business journalists, right? Because business journalists, they're not like required to be like experts on the matter. No, actually, on the contrary, they're supposed to be speaking to the experts. So if you're a financial analyst, I'm a business journalist, I'm supposed to come and ask you, okay, what does this mean for the market? What does this mean for retail investors, right? And then I'll take this information. All I need to have is an understanding, a clear understanding of what he's saying in a way that I can simplify it to you. You get what I mean? So like that's the thing. Like it is difficult for someone that studied this on an expert level. Like you studied finance, you studied this, like you studied the technicals of the stuff, you know? So it's difficult for you to speak of it in any other way, you know? But there is a big problem, okay, here. And that's the thing. That's what's missing, okay? We have the big legacy media, okay? And by the way, the way I learned about everything that I know and I'm interested in right now is through the legacy media, you know? If I wasn't reading those articles, I would have absolutely no idea what he's talking about, you know? Why is it going up? And when it went up last time, what happened?
Okay, it comes down.
Yeah, did it come down or not? I'm not saying it's going to come down, but give me the full picture so I can make an informed investment decision. And I can feel like there's stuff that I need to go and read about, you know?
That's also like another thing, right? Like when we do CFA, we are explicitly told not to give financial advice without knowing a person's risk, their capability of taking risk, how risk averse they are, all these things, right? Now, if I'm doing like when we do CFA and everything, we were supposed to give financial advice only if you know how capable of risk they are and how much risk they want to take. So the problem with giving like at least like I think this is like the anti-journalism view, is that if I give too much context without assessing the risk-taking capabilities of each and individual person. So Ghazala over here, she has, let's take an example, right? So Ghazala here, she's making a monthly income. She doesn't have immediate financial needs. So she's not in desperate need for liquidity or like cash in hand. She is somewhat risk seeking. She's looking to take a little bit of risk and get potentially high rewards, but also she's Muslim. She can't invest in products that are not halal, right? So if I know her, then I can say, hey, if you buy an ETF, this has these implications. This is X amount of risk. This can be halal. This can be haram. And this is how much money you're going to make. This is how your liquidity is going to be. You can get back money when you want. But if I'm giving it for a whole, what do you say? Like if I'm writing a news article or an article that says that these are all the cases, then it can't be personalized advice, right? And it becomes too generalized in the sense that this is advice, you take it or leave it sort of a situation, which feels a little unethical considering that people's money is involved, right? So that is where I would feel that maybe just giving that, hey, ETF is just a basket of stocks and stopping it there would probably be the right thing to do rather than go and explain further context. So that
is where I agreed to disagree, because I'm like, I need to ask her this.
But that's the thing, okay? What you're saying makes sense. However, the thing is, if you want advice, okay, and like you really don't want to, like you have absolutely you tried to read and you still have absolutely no idea what this means, or if you're just too lazy and you don't want to do your own research, get a financial advisor. That's the thing. If you don't want to read more about this and learn more about this, then you just probably should stay out of it anyways. And that's fine if you want to stay out of it, you know, but just don't say that it's so complicated if you didn't try to understand it, you know. It's not your fault if the people you're asking are explaining it in a very complex and complicated way, you know. But if you know someone that can simplify it for you, you need to have that drive to understand it like you're 5. And that's literally what I was telling all my mentors when I was getting into this, you know. I would literally tell them, like, sometimes, because I used to work with analysts as well, okay? So sometimes, like, I would go and ask them something like, what does that technical thing mean? And because they're experts, they would say it to me in that relatively complicated way, you know, to me. And I would tell them, I was like, can you just give me an example? I have like $10 and I want to understand what this means for my $10. Like, and they would give me that example. They would simplify it for me and it would make sense. But you need to have that drive to know.
That's exactly my point with him, because I think just a few months ago, me and Imam, we were trying to, so we had an amount of money and we're like, we don't want to keep it in our bank account because then it's going to vanish. But we need to do something with it. And we're like, we don't even know where to start. And like you mentioned with stocks, I'm like, I would research about it, but I need to know that ABC exists. And because I don't know ABC exists, I'm literally in a loop where I'm like, I don't know where I'm going. It's just, I read this, then I read that, and I'm like, not sure where to do.
Yeah, because
what
there
to-
isn't an actual like guide. And I know what you mean, because like I went through that at one point, and I get what you mean. It's not like how to build a camera and you would open and you would
Yeah.
find exactly the steps. There are no steps because there are no steps.
Yeah.
That's the thing. But there's an interesting thing. Lots of brokers have an option where you can start a demo account. Okay, so you can actually like trade with like it's demo, so it's not real money, so you can try it out and like see, oh, what if I put my money into that stock? What would have happened, if I put that on? And I think that's actually very beneficial, because there's just something about the stock market, as much as you read and as much as you understand it, you just understand it in a completely different way once you're actually in it. Once you actually like buy something, even if it's for like $5, okay, just buy, like, it's just that transaction, it clicks in your head. You go like, that's how it is. Yeah, it's so simple. I get it now, And then like, like, yeah, there are some other like complicated stuff. Maybe you don't need to know them anyways, So that's the thing. Like, you just like, yes, you need to know the context. It is important to do your research and know the context, okay? But where to start, it's a very interesting question. And
it's just, the other thing is also like there's only so much you can learn, right? Some
Yeah.
of these things you just have to be aware of certain things. So for example, if you put your money in stocks, all right, the stocks are not determined just by the charts, right? The charts tell you jack shit, right? To be honest, the charts, you can do some analysis, you can like say there's a 50% probability it goes up, 50% probability, but that's, again, it's just probabilities, right? What really drives the market is the news surrounding it, right? Like if, say, for example, Apple has a new event coming, the chances of its stock going up is slightly higher, right? It's not certain. You can't
it's
map
not an
your way around
equation.
it.
Like, it's not an equation. It is always like what moved the stock yesterday, the stock market yesterday. What moved it yesterday could literally like
Flatten it.
flatten it today. Like,
it's just odds, right? Like it's like flipping a coin.
vibes.
That's it.
When you think stock market, you just feel like it's such a complex place for smart people. And like, probably a lot of people on there are very smart. But if you actually think about it, what is a stock market? It's a big bunch of people all around the world sitting behind their computers or on their phones, okay? And they're literally just buying and selling stuff. It's human, and these people are human beings, and they have emotions. They have emotions of fear, anger, excitement. These people have emotions, and that's something called behavioral economics, and it's actually so important to learn about. It's like, basically, like, in a nutshell, what it says is, what happens in the stock market, it doesn't always have to be rational. The decisions that people are making, they don't always have to be rational. Like, he could tell me something about the company that I have a stock of, okay, in my portfolio, okay, and he's the CEO, okay. He tells me something, and like, I freak out, and I'm like, okay, I'm selling that stock right now. But what he said like didn't mean like anything. Actually, like, it's fine, everything's chill. And this happens a lot. So many things. That's why so many things in the stock market, they move up and down. Some things are like very obvious and you can tell why it's happening. Some things are like, why? Like, I just don't.
Very common example is like every American election, the stock market goes down, right? It's historically, doesn't mean it will happen this year. But why it happens is, let's say, for example, there are two presidential candidates, Biden, Trump. Biden has an FTC that is a little more, there's more scrutiny on big companies. But Trump comes in, there's more tax cuts and everything. So technically, if Trump is elected, it's technically good for companies, right? But even then, the stock market goes down because there is that uncertainty, right? That everybody has that fear and they fly off. That's
exactly
right. So it's just pure emotions.
It's really emotions. Like, sometimes there are things that make sense, but so many other times it doesn't make sense. Where do I start? Yes, you do have to know the context. You do have to understand the general idea of how the stock market works. But it's not just about, I have some money and I want to put it in the market. No, you actually need to understand and know what you want to put your money into. Okay, it's like buying a house. If you want to buy an apartment, okay, or whatever, like a house for you to live in, what do you look at? You go and like, you look for like a good area that makes you feel good and like feel nice, something like, that obviously like within whatever it is within your budget, okay. But and then you look at like certain things, you know, depending on what your priorities are, the neighborhood, the community, how old or new the building is, how well it has been maintained over years. So like this is all stuff that you look at, so you can determine if this is good enough for you based on what you are looking for, right? It's the same thing with the market. It's not just I have money and I want to put it in the stock market. No, you should learn about the world in order to know what to do in the stock market. So for example, pure example, Apple, okay? I'm not going to be like, I want to buy the Apple stock and like, that's it. No, like the way I should get there is probably, okay, like the Apple stock, let's say it's go. Okay, let's take Nvidia, because Apple stock is a bit like, you know, it's not, it's a bit flat like over the long term now. But Nvidia, for example, it's going up so much and I see everyone talking about it and I have absolutely no idea what's going on there. I'm like, why is the stock going up? Okay. I'm going to go and Google Nvidia. I'm going to find out that this company is making high performance AI chips that all the other big tech companies are buying so they can do this, like work with like all the AI projects that they're doing right now. And Nvidia right now is the only company that is making those high performance chips. There are other companies that are making them, but they have like the, you know, like they have the
market share.
Yeah. They have the market share and they have the most advanced ones. Yeah, the best ones. So I'm going to be like, oh, like that's like a good company. Then how has it been doing? You know, like, has it been doing well? Let's check the earnings, you know, let's check the financials of this company. Has it been doing well? Strong fundamentals. Strong fundamentals is that, like, basically, like, is it doing well? Is it performing well? Is the product that this company providing to consumers, is it valuable? Is it something that we're going to be using in like 20 years, for example? Okay, or whatever, 5 years, 10 years, 1 year, okay? But that's how, my point is, that's how it should be. You should truly read the story and see if that is something that you believe. If you put your money in, you're gonna actually like make something out of it. And even if it doesn't work, you believe in it. And a financial analyst I was working with a while ago told me this, you know, when I was trying to understand the stock market, I was like, but like, even if someone wants to put money in the stock market, like how do they know where to put their money? And he said, you should invest in something you believe in. And I was like, that makes no sense. I don't believe in any specific company. Like, why, like, yeah, okay, I know Apple is a great company, but like, I don't like believe, like, I don't feel like any kind of connection, you know, like, it's not, you know, like, what do you mean? But it started making sense over time. When you look at the market and you start seeing that, for example, a company like Nvidia and all the other tech companies that come with it, because of this AI craze, they're going up. Why? Because the people buying into this would be like, and based on that, he would make his investment decisions. That's value investing. There are so many other ways of investing.
Probably a slightly much more condensed way of thinking about it is that basically you evaluate what is the value of future cash flows. Okay, what affects the cash flows in the future? 5 years later, 6 years later, you have to get some cash flow. It can either be in the form of dividends or you sell back the share. What is that cash flow going to be? So these things affect the cash flow, the governance of the company, the competitive position of the company, the product of the company, the marketing mix, how they do sales. All of these information affects the cash flow.
And what is that? That's the story of the company.
Yeah.
That's the story. So you have to read the story first. That's the thing. You have to want to know how the things work before you make decisions, you know, especially with your money. You need to know how things work. You need to have that drive to understand how this works. Because it's not just like, I have money, let's jump into the stock market because everyone is making money. Maybe you'll do that. Maybe you'll make money out of that. Okay. But it's just more risky when you do something you have no idea about.
Not just that, historically speaking, like of all the past data, if you actively trade, buy, sell on a day-to-day basis, you actually end up making a net loss at the end of it.
That's the thing.
It's a proven thing that if you do day trading, you will, like, about 90, don't quote me on the number, but 90 to 95% of them, they just lose money.
Warren Buffett is also like, if you don't know anything about the stock market or you don't know where to start, it's very interesting to also read the stories of people, of very successful investors, and like how they started, because it kind of gives you something that looks similar to you, you know, to your life. So like if you read Warren Buffett's story and you see that when he was a 19-year-old, like he did an internship in that place and this place, and he got into the stock market when he was like 10 years old, and like he bought his first share, and then he started thinking, and how can I have like a proper strategy, you know, for building my wealth? And it's very interesting. His Warren Buffett's story is very interesting. He actually interned with Ben Graham. Benjamin Graham is known as the father of value investing, and that's basically where he learned everything, you know. And that's what he says, like a lot of the money and the wealth that he built, he attributes it to a book that he read that was written by Ben Graham, and that's how it started. He started, like, I'm pretty sure, yeah, of course there were different parameters in his life, but the point is he also had no idea in the beginning, and he learned it step by step.
Nancy Pelosi's portfolio is a great example, right? She's been outperforming S&P 500 consistently. Right?
Tell me more.
So Nancy Pelosi was a Speaker of the House, like the US House. Okay, she made trades that nobody would have predicted, and right after she makes a trade, there is a new policy, US government policy, that favors her trades.
Okay, that's that's funny. That's something to read about as well. You see, there are so many funny stories in the stock market. If you read them, you would find them easier to read because they're funny, and they would make you understand so many things.
She's the most successful trader. Like we're talking about, like Charlie Munger, this person, Nancy Pelosi. There is like a tracker that just tracks what Nancy Pelosi does, and there are people trading on Nancy Pelosi's trades now.
And then there's also like another tracker that tracks someone like Jim Cramer.
Jim Cramer, like whatever. Jim Cramer is the CNBC host. CNBC and Bloomberg are different companies, right?
Yeah.
Okay. So CNBC host, he does like recommendations, and whatever he recommends,
it's
the
always
opposite,
wrong.
the opposite happens.
It's always wrong. So there are literally also like tools that track like whatever he says and does the opposite.
Yeah, inverse Jim Cramer.
Yeah, literally inverse Cramer, you know. So like whatever he says is always, by the way, and this is actually, it's such an interesting like blessing, because like it's so difficult to always be right or always be wrong. Like really, like seriously. So like if there's someone that's always wrong, yeah, okay, you know what? Like if there's a tool that tracks the complete opposite of what he's saying, and this guy is always wrong. There's a very interesting book if you're interested in reading something about this. Principles of a Changing World Order by Ray Dalio. This book is beautiful. Ray Dalio, he basically has the biggest hedge fund in the world, Bridgewater Associates. You can read about that later, but this book, it basically examines how historical cycles and like economic like move, like how the economy like moved like over like decades and centuries ago, you know, and how one thing led to another, you know, and how world powers kept alternating, you know, from the Dutch Empire and then up to, you know, and like how the sterling was a reserve currency, and then it became the dollar after World War II. And like most probably whatever happens today or what happens in the future has already happened sometime in the past, you know, long ago, like sometime in the past. And if you studied that well, like if you read about the history of the economy, of the world economy, and the history of world wars, you're going to be able to make more informed decisions next time something happens, because you're going to be like, when that happened last time, that's why so many people were able to make money in COVID.
Yeah.
You know, because they know that this is a pattern.
These
that
are
has
like
happened
signals
before.
for it. Yeah.
Yeah, this pattern happened before, and they know that it happened before, and they took reference of that, and they were like, okay, that's how we're going to make our decisions. You know, some people in COVID were freaking out. They're taking money and some people put so much money into real estate and the real estate, because real estate prices literally were on the ground in COVID. And then they made so much money out of it, you know? But that's the thing, like that's a very, and even if you're not interested, like if you're not into reading, Ray Dalio actually made a very interesting animated video for this book. It's like a 45-minute video on YouTube. And it's okay, if you don't want to change the world, it's fine. But if you want to change the world and someone tells you, no, you can't, don't listen to them. Don't listen to them. that, and that tells you about the financial crisis, and they go like, oh wait, that's much deeper than the actual story, the funny story that I was reading, and then that's what hooks you in, you know. It's maybe for me, because I'm a journalist, it's all about stories, but it's everything in the world is a story, you know. You have a story, and I have a story. Everyone here has a story. Every company in the world has a story. Every investor in the world has a story. Every criminal in the world has a story. Every fraud, like for example, Bernie Madoff. Like, come on, that story was like that guy. He was a fraud, you know. Like he ran a Ponzi scheme. But that's the thing, it's a story.
It is considered as one of the most prominent Ponzi schemes. Every other Ponzi scheme is compared to that.
Yes, literally. There's a documentary. Was it a movie or a documentary?
I don't know. I
don't know if it was a docu-series or a movie, but it's very good. Watch it. It's interesting. And they actually get people that were conned by Madoff. And that was also, by the way, around like the financial crisis period. So it's interesting, but like that's the thing. You don't have to think about it like, oh my God, it's so complicated, and like economics and like financial markets and stock markets. Yeah, there are some complex things, but you don't have to start there. Really start with the stories.
Not just that, there are things that are extremely, extremely, extremely complex, like bonds, but like with different options and so.
Sometimes you won't even know, like you don't have to know them.
You don't have to know. You can't afford them. The second thing is, even if you afford them, like you probably wouldn't want to get into it anyways because they are very high risk things. So it doesn't matter. So if it's extremely, extremely complex, you don't need to look at it.
There are some things like the bond market is such a complicated market. It's actually complicated. Like it's like, but if you want to understand it, you will, you know, like if you're like, I want to understand that, you will.
Thank you so much for being part, having this lovely conversation.
No, I love
we'll
this.
probably
truly.
just keep on talking after we stop the recording.
Yeah, I mean by the